You're listening to the Cash Podcast, creating affluence, success, and happiness with your financial surgeon, Adam Koos, President and Portfolio Manager at Libertas Wealth Management Group at libertaswealth.com.
Hey, everybody, and welcome to the Cash Podcast for April 20th, 2023. And I've never in my career done a podcast like this before. And I guess maybe I should have. There's definitely a better time in the past to talk about what my kids call weed stonks. And they say that specifically that way, STONKS. So weed stonks. But today I'm going to be briefly going over the state of the market as it specifically pertains to cannabis stocks. Why? Well, because it's 420, the date both smokers and non-smokers, I suppose, recognize as a national holiday for the cannabis culture. Now, you might ask, why is April 20th considered a day for marijuana? Well, there are actually two reasons, believe it or not. First, it has to do with a story that goes like this. Apparently, there were a group of teenagers back in the 1970s from San Rafael High School in Marion County, California, that would meet every day at 4:20 p.m. by a campus statue and partake in a little smoking. They called it themselves the Waldos because they met at a wall each day after their extracurricular activities had ended. But the other reason they use 4:20 p.m., and the same reason that April 20th is used is because 420 also happens to be the police code for marijuana smoking in progress. So there you have it. But we're talking about weed stonks today. Before I get started, as always, a few housekeeping items. If this is your first time listening or watching, thank you for joining us. I'm Adam Koos, President, Portfolio, and Senior Financial Advisor at Libertas Wealth Management Group, and you're listening to the soon-to-be renamed and rebranded Cash Podcast. While the name is going to change, you'll still be the first to get these episodes if you subscribe. So please be sure to link up and subscribe on YouTube, Twitter, and Spotify, and you can follow me on Twitter at Adam Koos, Adam Koos, as well as Instagram at Adam D Koos. If you'd like to schedule an intro call to confidentially discuss your financial situation, your portfolio in more detail, or if you'd like to get a second opinion on your retirement plan and or investment portfolio, head over to our website at libertaswealth.com. Just click on that button that says click here to get started in the lower right-hand corner, and you'll go through a few questions, and then somebody will reach out to get something on my calendar. Last but not least, of course, all links, visuals, charts, and other educational resources are always available on our website or on the YouTube page. So if you end up listening to this podcast as opposed to watching it and you want to see the charts later, I am going to have 4 charts that I'm going to be showing, but I'll try to walk you through them. So, all right, let's go ahead and get started. So as always, I have a quote of the day, and this is my friend Brian Shannon out at Alpha Trends, and he says, "Only price pays." Well, what's that mean? What's only price pays mean? Well, what it means is that there's all these different fundamentals you can look at. You can look at what the price to earnings ratio is of a stock. You can look at what earnings have been coming out over the last several quarters and earnings growth. You can look at earnings estimates. You can look at price earnings to growth ratios, price to book ratios. But at the end of the day, a lot of the fundamentals that people analyze, if they are fundamentalists, that is, all come down to price. In other words, price is always, not always, but in most cases in many of the equations that fundamentalists use. So the question we might ask is, why not just follow price then, right? So only price pays. So if it's in an uptrend, maybe we want to own it. If it's trendless, maybe we wait. If we own it, we hold if it's trendless, perhaps. But if it's in a downtrend, we probably don't want to own it. I haven't known too many people who do well in terms of being successful investors that do well owning stocks that are in a downtrend. So only price pays. Brian Shannon, Alpha Trends. As we look at the first stock, so I've got a couple stocks here and then a couple ETFs, a couple baskets of stocks. The first one of the more popular cannabis stocks is called Canopy Growth Company. The symbol is CGC. And what I did here is I went back to just before 2020, just to kind of see how the stock's done. So when we look at the stock's performance since the peak, which would have been in early 2021, believe it or not, the stock is down from more than $52 a share to $1.51 today. When I say today, as you can see on the chart, if you're watching, all of these charts were published on the 13th of April, at 5:39 p.m. So in other words, April 13th after the market close. So this will be probably about, I guess, a week old by the time you see it, because I am recording it a week before we publish it. So still though, 97.1% down off the early 2021 high. Not good. Granted, if you would have held it since early 2020, the pain would have been worse. I'm sorry, not worse. The pain would have been better. Sorry, that's what backwards. Apparently it's backwards day, because obviously in 2020, the price is, if you're watching on YouTube, was right around $20 to $21 a share if you owned it back then. But if you owned it off the highs, 97% down. That's pretty painful. If we look at the next stock, another one that is pretty popular in the cannabis world, it's called Tilray Brands. And to be fair to the cannabis bulls, and what I mean by that, people who are bullish cannabis stocks, people who like them. And by the way, the reason they call bulls and bears bear markets is because bulls attack with their horns from the bottom up. So it's an up market, bull market, that's good. And bears attack with their claws from the top down, which is why they call them bear markets. So bull markets are good, bear markets are bad. If you are a bullish person, you think it's going up. If you are bearish, you think it's going down. So when I say for the cannabis bulls, these are people who really, really feel good about cannabis, and they think that even though in this case, Tilray Brands since the beginning of 2020 has gone down more than 84% in value, these would be people who still think it's a great value now and you should be buying it. And maybe they would be right. I have no idea, because none of us can predict the future. All I know is that when I look at this stock, I see lower highs, lower lows, and a very, very, very distinct downtrend going all the way back, again, just like Canopy Growth Company, going all the way back to the beginning of 2021. So if for those of you who are listening on iTunes, the price was right around $17 or so per share in early 2020, right at the beginning of the year, before COVID. It fell to about $2.45 during COVID. Then it ran back up eventually in early 2021, all the way north of about $51 a share. And since then, it's just gone down. There hasn't been much in terms of an uptrend to speak of. But I'm using, again, just to be fair, like I said, to those who are bullish cannabis stocks, as opposed to going off the highs this time. So what I mean by that is with Canopy Growth Company, I compared the performance from the highest point in early 2021. With Tilray, what I'm looking at here is the price since the beginning of the year in 2020. And since then, it's down more than 84%. Right now, again, just like with Canopy Growth Company, what I see here is a clear downtrend. So I know I kind of said that a second ago, but I just want to make sure I'm being 100% clear here. Even though it is 420 that this podcast is being released, which would be a celebratory time for the cannabis world, it's not really the best time to be buying cannabis stocks, I would say. At least they aren't in an uptrend, that's for sure. You'd be doing what we call in the industry, and in the technical analysis industry, catching a falling knife, which just means that instead of waiting for an uptrend or waiting for this stock to base out and settle, you're trying to catch the knife as it's falling to the ground. And what that can do is it can cut you up, or cut your portfolio up, I guess we should say. The next chart I want to show you and talk about for those of you listening is the MJ, in other words, the Alternative Harvest ETF, which the symbol is MJ. And what we're looking at here is, instead of since 2020, again, I wanted to do each one of these charts differently. So Canopy Growth Company, I compared the performance off the all-time high. For Tilray, I looked at the performance since the beginning of 2020. And what I'm doing with MJ, with this basket, because that's what an ETF, an exchange-traded fund, is. It's a basket of stocks. In this case, it's a basket of cannabis stocks. And since its inception, when it first came out, when it first came to market, it came to market right around $25, $26 per share. And that was looks like just before 2016. So it's been around for a while now, but it's down almost 87% since it first came out in 2016. Now, if we go back in time, we can see that late 2015, early 2016, it traded anywhere between $26 a share down to as much as, call it 22, up to as much as, say, 31, 32, and then back down again to around $25, $24 a share. So it kind of bounced around in a range between $22 and $32 a share right up until the beginning of 2018. Then we started to see more volatility. Now, that doesn't necessarily mean down all the time, but just more volatility both up and down. Now all of a sudden the range expands here. in 2018 from instead of between 22 and 32, now it's expanding all the way up to say $42, $45 a share, but going down as much as say $22, $21 a share. So the range just got bigger. And then from there, it just kind of went down. 2019, it looks like it peaked at around $36 a share, headed all the way down to maybe $9 a share, maybe $8.50-ish. It did find some highs again, like a lot of the cannabis stocks did in early 2021, going up from $9 a share or so up to around $33, $34 a share. But ever since early 2021, just like Canopy, just like Tilray, this has been in a downtrend since, currently trading at the close of the market of April 13th at $3.40 per share. Again, down since its inception, down more than 86%. Not good, obviously. And then the last one I'll show you, this is more of a pure play on the cannabis industry. The symbol is M as in Mary, S as in Sam, O, S as in Sam, so MSOS. This is Advisor Shares Pure U.S. Cannabis ETF. So as opposed to having a lot of the ancillary companies involved in the cannabis industry, people who supply to the cannabis industry, this is more of a pure play in terms of cannabis stocks, growers, distributors, and so on. This stock, when you go all the way back to the beginning, IPO, I shouldn't say IPO'd, but the ETF first came to market, I should say, at about $25 a share in late 2020. In early 2021, again, this is going to sound familiar, it went from around $21 a share, is as low as it got in late 2020, to as high as $55 or so a share in early 2021. But since then, again, just like the other stocks, just like the ETF I just mentioned, the MJ ETF, has been pretty much in a downtrend since then, with maybe, we could say maybe one attempted trend reversal in late 2022 that just failed. But from $55 or so per share to where it's trading right now at $5.54 a share at the close of the market on April 13th. So again, if you're listening to this, the day it comes out, that's about a week ago. But if we look at the performance since the inception of this ETF, it's down more than 77%, with really no signs yet of a bottom. And so we don't see any, higher lows yet, let alone higher highs. So again, I'm not so sure that I'd be dipping my toes into the water when it comes to investing money in cannabis stocks. And I guess this goes to talk, I guess we can talk a little bit about how people have a bias sometimes when they believe strongly in something. So, and what I mean by that is, if some people, they might own Kroger in their portfolio because they like to shop at Kroger. They might, they might own a stock like Ford because they only buy Ford vehicles, for instance. So there's this allegiance, this bias, ownership bias in that case, to the stock in question. And I think what happens a lot of the time, and it's not just with cannabis stocks or with automotive stocks or grocery store stocks, I think just in general, people sometimes can have a tendency to get married to a stock, and they can like that stock. They can believe in it and feel that it's really going to go up and have a lot of hope in it. And what one of my mentors taught me very early in my career, and I've been doing this for almost 22 years now, but he said, the first thing you need to be able to do is put your hand over the chart. In other words, the name on the chart, not the chart itself, but you should be able to put your hand over the name of the investment in question and just look at the chart and the data in front of you and know whether or not it's an investment you might want to own. In other words, don't let the name of what the investment is tell you to or not to invest in a particular investment. In this case, we'd be talking about an investment in cannabis stocks that are going down in value, but because we see the name and maybe we believe so strongly in the cannabis industry, it can cause us to just keep bleeding money incessantly until we're out of money, potentially, right? So the same can be said, though, for any industry. You can, again, I mentioned Kroger and automotive stocks. I mean, you could believe so strongly, or you could hope or think that something's going to go up in value and it just doesn't do it. So the reason I say that is because the other thing my mentor told me is you never use the words hope or I think or I like. You should not like an investment, and if you do like an investment, you've already got a problem because you're already biased. In other words, you're going to have a really, really hard time selling it if you like that investment, or you're worse yet, if you're passionate about it. If you think it's going to go up, because how do you know it's going to go up? Nobody knows what's going to happen. You might have a bunch of data that you can look up on the internet, and you might think, well, the PE ratio is this versus the market. It's lower than that of the market, so therefore maybe it catches up to the S&P's PE ratio. We don't know that that's going to happen. Nobody does. You might think there's a congressional bill that's going to be signed that might increase the value. We don't know if that's going to happen or not. I always like to use the example of Apple stock, because everybody knows Apple. Apple stock does not go up in value because Apple has a record quarter selling iPhones. That's not why the stock goes up. The reason why the stock goes up, if it goes up, is not because Apple had a record quarter selling iPhones. It's because people bought the stock because Apple had a record quarter selling iPhones. So just because a company sells a lot of something, or makes a lot of something, or just makes a lot of money, whether that be in earnings or gross profit, has nothing to do, in my opinion, has nothing to do with the absolute reason why a stock goes up or down in value. The only way a stock can go up in value is if people buy it. And the only way it can go down in value, by the way, is if people sell it. If nobody buys and nobody sells a stock, if a stock sits untraded and does not change hands at all during a day, it's probably not going anywhere in price. I mean, there'd be nothing affecting that stock that would cause it to go down in price, all things held constant. So the irrefutable law of supply and demand is alive and well. And when we're looking at investments, in this case, we're talking about cannabis stocks today on 420, right? Just because you might like the cannabis industry doesn't mean you should invest in it. In other words, you should invest in companies, stocks, industries, sectors, asset classes that are going up, exhibiting strength. In other words, another one-liner, this is not my quote, but this is a great quote. In this business, we try, but it's pretty hard to buy low and sell high. What we want to do is we want to buy high and sell higher, because to buy the low or close to the low is pretty tough to do. So with that all being said, I think now would be a good time to close up here. I really, really appreciate you taking time to watch this episode. Feel free to share it with your friends and family. And if you'd like to discuss your personal situation further, please remember you never have to be a client to ask a question. As I mentioned earlier, if you'd like to get set up with an intro call and discuss your financial situation more specifically, or if you'd like to get a second opinion on your retirement plan, head over to our website at libertaswealth.com and click on that button in the bottom right-hand corner that'll pop up that says click here to get started. Again, there'll be a few questions that'll ask you, and then from there, we'll get something set up on our calendar. Be sure to subscribe on iTunes, YouTube, Spotify. Remember, you can sign up at libertaswealth.com, by the way, to not only get these updates, but you'll also get access to our screencasts, videos, articles, everything we send to our clients delivered as soon as they're released directly to your email inbox. You can also follow us on Facebook. I'm also on Twitter at Adam Koos, Instagram at Adam D. Koos. And as I always say, there are thousands and thousands of podcasts out there, and you chose to give hours a listen today. So thank you so much for joining us, and we'll see you next time.
Thank you for listening to the Cash Podcast with your financial surgeon, Adam Koos. To see any charts or images that were mentioned in this show, or to check out additional articles, videos, and other educational resources, head over to libertaswealth.com.